Hello guys, moving forward with our project here, and this is the third part, trending cycles, and this is the description and interpretation of what a trending cycle is. When trading Ichimoku, Kinko here, or trading binary options using the Ichimoku, Kinko here, well, regardless the time frame you are looking for, this is a 4-hour chart on the euro dollar, for example. All this project is being done on the euro dollar. We have three different cycles. So let's write here that we have 3 cycles that need to be identified. One of the cycles, the first one is a bullish cycle. So we have a bullish cycle. Of course, that we have a bearish cycle, and these are trending cycles, like this part of this subchapter of the project shows. So bearish cycles, and whenever market is trying to shift from a bullish cycle into a bearish cycle, or from a bearish cycle into a bullish cycle, it is making the so-called transitory cycles. Now, a bullish cycle, like the text that you have there on our project, a bullish cycle means a green cloud. It means that the Tenkan is bigger than the Kinjun. It also means that the Kinko, it is above the cloud and price, and this is a bullish cycle. Now, a bearish cycle, of course, means the exactly opposite, and it means that we have a red cloud signaling bearish conditions. The Tenkan is lower than the Kinjun, and the Kinko, so the Tenkan here is lower than the Kinjun, and the Kinko, it is actually below the price and the cloud, or the Kumo. Now let's try to identify here and try to see if we have a bearish cycle, and from this moment on, the bearish cycle comes only after the Kinko breaks below the cloud. So Kinko breaks below the cloud, but keep in mind what Kinko means. Well, Kinko means the actual price, the current price, is shifted 26 periods behind, so 26 periods ahead here, and this is the moment of time when the bearish cycle begins. So we want to mark this down here. Bearish cycle, let's make it red. So this is, let's say, here the bearish cycle starts. Bearish cycle starts. And it keeps going. The bearish and bullish cycles are trending cycles, and such a cycle, it keeps going. It keeps going as long as conditions stay the same. In this case, the conditions stay until Kinko here, it is closing above the price. So Kinko closing above the price right here. So 26 periods from now, and this is the moment where the bearish cycle still exists and it is still valid. Until that moment of time, all we had to do is to look for places to engage into buying puts, looking for short-term, let's say for short-term expiration dates, or depending very much on the time frame you are looking for. This is a 4-hour chart. From the moment that the Kinko it is breaking above the price here, we are entering a transitory cycle, but that would be the object of the previous of the next subchapter of this analysis. So this is a bearish cycle starts, and the bearish cycle, of course, here ends. Now, also within the bearish cycle, if you have, I don't know, if you are trading based on Elliott waves or whatever the strategy you are using, within the bearish cycle, you might have bullish patterns like here. This is a pennant. If you go back in this project from the moment that we started the analysis on the euro dollar, at some moment in time last Friday, we had this pennant, and we've discussed that this should break higher, and we even showed the measure move, and there you go. This is Tuesday, let's say, and the measure move has been approved. Now this is a bearish cycle, and from this moment of time, 26 periods, from this moment of time, normally the transitory cycle has been, and the transitory cycle should stay until market shifts into a bearish cycle as well. If it is not shifting into a bullish cycle, sorry, if it is not shifting to a bullish cycle and comes back, and all the conditions that you see above are going to come again, then the bearish cycle appears as well. Now let's try to identify a bullish cycle. So this was a bearish cycle, and on the 4-hour chart, a bullish cycle started not here, okay, but started when the Kinko closed above the cloud here. So the bullish cycle normally started here, but remember what the Kinko means. Kinko means price. It is projected back 26 periods of time. Now this is 26 periods of time, so this is the moment, this is a moment our bullish cycle begins. Not there, but right here. Let's make it green so that we know that this is bullish. So bullish cycle begins, and bullish conditions hold as long as the prerogatives for the bullish cycle hold. So basically this bullish cycle goes all the way to here, and by the time the Kinjun and Tenkan lines are crossing again, we have another bullish cycle that begins, and all this time, and this is where the bullish cycle ends. All this time, basically, this is a moment where we should engage into buying calls. Why buying calls? Because we are looking at the expiration time price to go to be higher than the striking price, and normally with the Ichimoku we are looking to buy binary options and buying calls based on either the Kinko here coming and testing the price, either bullish cross here for the Kinko and for the Kinjun and Tenkan, like discussed earlier in the project. So a lot of options, and this is a 4-hour chart and goes from the 16th of July, as you can see, until the 2nd of August. So almost 2 weeks only for buying calls with different expiration dates, depending on the structure that you see here and on the strategies that we've discussed. We will have specific strategies on the next part and the final part of the project, on the 4th part, specific strategies to trade binary options on all the time frames, short-term time frames, medium-term time frames, and long-term time frames. And those kind of strategies you should apply after you identify a bullish or a bearish cycle or in a transitory cycle. So stay tuned, please, and moving forward with our project.